Let's take a look at how to make appropriate segment elimination decisions. Most medium-sized and large companies are organized into business units that may be referred to as segments. The segment can be a product line, a department, a division, or even a branch office. Let's assume that Premier Office Products is divided into 3 segments. The first segment sells copiers, the second sells computers, and the third sells printers. The management at Premier is faced with a situation where one of the segments is operating at a loss. The question is, should that segment be eliminated? Here's detailed information about the 3 segments and the whole company. Notice that we've arranged the information with our revenues and then our unit level, batch level, product level, and facility level costs, as well as our allocated corporate level costs. The allocation of corporate level costs is more or less arbitrary. The copier division is operating at a loss while the other 2 segments are reporting income. So you could see that here. Should we eliminate the copier segment? Making that decision is a 3-step process. First, we determine the amount of relevant revenue that pertains to eliminate this segment. That revenue will go away. Determine the amount of cost that can be avoided if the segment is eliminated. And then, if the relevant revenue is less than the avoidable costs, eliminate the segment. If not, we need to continue to operating it, even though it's operating at a loss. In the first step, we know that the copier segment is eliminated. If the copier segment is eliminated, the company will lose $5,500 in revenue. Since the revenues differ between the alternatives, it is relevant. In the second step, we determine the cost that will be eliminated if the copier segment is discontinued. Notice that the allocated corporate level costs are not avoidable, but will merely be allocated to the remaining business segments. And only a portion of the facility level costs are avoidable, being the division manager salary and the administrative cost for the segment. Therefore, we can avoid $488,000 in costs. We can avoid all of the unit level, all of the batch level, all of the product level, and then the segment level, facility level costs. And then finally, we compare the 2. So the revenue loss is $550,000. The cost avoided is only $488,000. Therefore, if we eliminate this segment, we're actually going to have a decrease in profit of an additional $62,000. The main reason for this is because the corporate level facility costs do not go away. They're simply being allocated to the other 2 business lines if we eliminate the copiers. In addition, we need to consider the qualitative considerations. So if Premier eliminates the copier segment of its business, employees will be displaced and their lives will be disrupted. Management may cause some customers to seek other sources of office equipment, specifically companies with broader product lines. And then there's the additional impact of the freed up space that was previously allocated to the copier segment. So we need to consider all of these things as well as the numbers. Generally, special order decisions affect unit level and in some cases batch level costs. Outsourcing decisions can avoid these two types of costs as well as product level costs. And then finally, segment elimination may avoid all level of costs, including some facility level costs. The more complex the decision level, the more opportunities there are to avoid costs. We're also going to take a look at making appropriate asset replacement decisions in the next video.